Okay, we're on with Fari Hamzei, Hamzei Analytics, and Fari. Before we go into the markets and stuff, Eric, the
Sure.
intern on the desk, he asked me about your background, and I know you've talked about it before, but
My
just
background.
yeah, just your
My background is I'm a geek by training, financial engineering. My dad was a fighter pilot. I always wanted to go to U.S. Naval Academy because I wanted to be front seat at 14. My eye correction was a problem, left eye, so I ended up going to Princeton, some little small school in New Jersey, exit number 8.
I know
And
that.
then I finished that. Executive of Northrop called and he said, "We read your thesis. It's on F-14, especially that engine problem on the Pratt Whitney engines. Can you come out here for interview?" I'm thinking they have a place in Washington on K Street, which is their analysis group. That's the only thing I knew Northrop was. It turned out to be California. So I left New Jersey for during spring break in Parker. Land there, I had to switch to shorts, Bermuda shorts. Guess what? I said, I'm not going back. They told me, no. You got to go back. You got to finish your thesis. You got to get your diploma. No job. Next thing I knew, I was working on F-14. F4, F5, and F5E and Fs, 747, and F-18 program, and then a couple of black programs, black projects, which I cannot talk about.
You'd have to kill us.
And they put me what's called operations analysis, which was all, again, financial engineering in a setting of a high-tech company. And if you recall, back then, this is late 70s, early 80s, back then, Silicon Valley wasn't as mature. There's really the mature high-tech companies were aerospace. So it was great training, but my love was always also electronics. You see what happened with Apple and Microsoft and so forth. My brother had a project. I invested a little bit in that. Next thing I knew, I had to quit Northrop and help him out. We did not do too well. The first product, usually nobody does. The second product, we designed it, went to the market in 28 days from scratch, from a back of a what do you call it, diner, the cover under your plates. Back of that, we scratched some idea. 28 days we were shipping. Every computer land was carrying it that I knew in California. Our margins were like 400%. We could not ship fast enough. And then IBM decided to come to that market. And when a big 8,000-pound gorilla comes into a room, watch out. And I talked to my partner. I said, "Do you want it?" He goes, "What are you talking about? We're at all-time high here. What were you doing?" I said, "Well, you buy or you sell. Which one you want?" He goes, "I buy. My wife needs a new wardrobe." I said, "Sold." He was bankrupt the following year. And then I learned. That's how I learned about entry and exit strategies right there.
Okay.
So I had a year off, and unfortunately, I heard he went bust because you cannot mess around near IBM and survive. It's you're a little fly on the back of a big elephant. So anyhow, I was in financials again, doing Alt-A. I was doing Alt-A in '87 in Brentwood, when nobody had heard what Alt-A meant. We did excellent credit only, collateral, including first, the wife had to sign, okay? The wife had to sign on the loan. The house had to be collateralized, and it was for business only. So people who needed money fast, they couldn't go to Wells Fargo and get it in 60 days. I would give it to them 3 to 5 days. But I would charge 10 points. I would charge 10% for the fee. Hey, I need soup.
Yep.
Okay, and my better half needed new wardrobes all the time. She was expensive too. So fees were up. That was Brentwood. Hello, enjoy. Life goes on. As the market has slowed down, I said, this is crazy. This thing is going up and down. I don't like this cyclical business. Let me get into something that I'm very, very control. So and as you know, doing Alt-A, you're not that busy per se if you're charging good points. So I've got a couple of computers called e-signal. They ran a wire into a building, 10100 Santa Monica Boulevard, overlooking that escalon of fascism called the Los Angeles Country Club. And I used to show up at 6 in the morning, mark it up at 6:30. I wrote a little program that would go on option view, pick over bought and oversolds, rank them, and then we'll turn around and buy or sell the overvalued and sell the overvalued, buy the undervalued. and we'll hold them for a day or two and then dump them. That was my foray. Next thing I knew, I went a little bit more oomph, especially after the first Gulf War. A little more oomph, market-wise, because I was trading XMI options. And sometimes could be hit and miss, but the big picture was what the option view called matrix, when the MIVs would change. I know you've been on the floor quite a bit. I know Dennis has been. When you MIVs on the floor change, there's a sentiment change. You got to pay attention to that. So next step for me was a little bit more oomph in terms of leverage, and that was bond futures. And did that on a Spark station, which is Unix-based from Sun Micro. Now it's part of, they don't make them anymore, but it's part of the Java part of it is now part of Larry Ellison's Oracle. Scott McNally came up with that, and also Eric Schmidt, classmate ahead of me at Princeton, who later on left. He created Java, and then he left, and that was with Google. But that's where I got into the futures game, and my second day trading was a non-farm payroll. And I had no freaking idea, pardon my French, what a non-farm payroll is. All I knew is that I got like 8% haircut that day. And I freaked out. Like, you can't have 8% down one day. I mean, you're done. What are you doing? So, it took me like a week to crawl back. Remember, bonds don't move as much.
Right.
But they're very steady. When they come after you, they come after you. There's no look back like S&P. So I said, this is interesting. And we were doing it on our own, and they had to write a lot of code. That's the first time I got a dish now. I got a dish from eSignal because I complained so much about data accuracy. I forget who was there, Wendy Winkler. She called me one night. She was head of all of the support. She says, hey, I see all these calls from you. Let me give you one of my satellites at my own cost. I pay the shipping. I said, now you're talking. So I get to that point where they give up on me and they need to reach their pocket to help out. So they send me a satellite, wide aperture, and that was it. We were rocking and rolling. Then I needed a little bit more better graphics. I found TradeStation because they were the only one who had a bridge for neural networks. We were trying, as you know, I was trading the bonds with neural networks, and then this thing hit.
Right. Okay.
TradeStation. Yeah.
Wow.
And the rest is history. I mean, next thing I knew, I was running a TradeStation for Los Angeles and Ventura County. That was the largest club in Southern California, second largest in the country for trading, and I had 400 traders there. Non-profit, there was no money in it. But I got to know a lot of key players, like, Steve Schulman and John Bollinger and Larry McMillan, because they were coming to speak to us. And a lot of great friendship was formed, and also they became my mentors. When I had a problem, I would go to them. I wasn't going to read a book. I just call them.
Where was it?
Hey, Larry,
where was that at?
What's going
Fari,
on?
where was that at? Where was that at? That you said there were 400.
Los Angeles.
400 traders, and what was it? A firm or what? What was it?
No, it was a user group.
A user group.
We met once a month for breakfast on a Saturday. These were our 4 hours, and we would have a couple of speakers, and it was audio-visual. I had his own website. It was one of the first user groups ever had an audio-video website. We would post the videos of the speakers and all that. Yeah, all free, all open to everybody. It's just they had to pay for breakfast. That was it.
Okay, so Fari, I know you turned a little bit, bullish earlier in the week, and now you're kind of getting this play here. A lot of volatility in the S&Ps overnight.
Yeah.
What's your take here on first of all on the S&P?
Well, I just got here. As you know, I got a 6:00 interview on Thursdays, on another network, as they say. I just got back here. I'm looking at it. Look, we had some VIX protection, probably not enough. We have to take a look, see whether it could be a little bit expensive to buy it. We've had now my other partner in crime, Ethan Primark. He's been fairly bearish.
Right.
So his stuff is really doing very, very well. Now, what we try to do now, and they were beginning to, now I'm sure today would be, what we try to do is have not the same expiration. So somebody in the room is not both long, Fari, short, Ethan, and the equal is zero, okay? Because of the two? No. So we have different expiration there. We just have to take a look. I think we're going to have a, worst case, we get to 1920s on cash to come back. That's a 50 bar, 21 I believe is a 50 bar. Negative 2.6 is 28, 29. Most realistically, it'll be around, I think the cash should be over around 45 area, 1945 area.
So
I doubt we'll go beyond that.
What, and could
you know why?
Could you give us...
Yellow put.
Yeah,
You let
yeah.
them talk.
Okay. Could you just give me the sigma levels on the futures here too, as far as like sigma 2, sigma 3, sigma 4, and sigma 5?
Sure. Absolutely. Give me a sec.
Okay.
I don't look at that because it's noisy, but here, let me give it to you right now. Just remember, SPX is much cleaner, better for that. But here we go. So 1922 is negative 2 sigma. 1937 is 1 sigma. 0 is 1951. Plus 1 is 1965.
Okay.
Now, I doubt a negative 3 sig is 1908. Okay, I don't see we're going to see that. Nothing has happened like that. So we'll have we're down right now at 0 sig. I am giving myself another sigma room here, which would be negative 1 sigma. That's 1936.
That would put me in the money on my bet.
Nah, don't say that. Don't say that.
Me and Joel just had a bet today. I think we could see 1940 today, just on a washout here. And you gave me 2-1 odds on it. Do you think I could see that 1940 level today, Fari?
You could. Intraday you could. Put some alarms up, like 41, 42, somewhere nearby, so it catches you. You get a new fresh sort of coffee, and then you get out at 40. It'll be a nice jump change if you were
I
short.
just want to get my Potbelly lunch from him, so all I need is that 1940 to trade.
We may cover our VIXs down there. We'll see. We've been sitting at it. Probably don't have enough, but that was our summer protection, if you will. So it came early. The charts right now, they're trying to begin to give a signal, but if this is not real digested and in a negative way, it'll be a bump on the road.
So you're still long-term bullish.
Problems in February in terms of chart-wise. The worst we did, we went to 3 sigma. We were there 1 day. 1 day. Go back to your charts. You'll see it on February. Okay. When they 1 day, turn around, back up. So I don't know. We'll see. There's a lot more should come out. I guess you guys have been at it a little bit longer than I have. I had to travel to my interview, come back, just got here, looking at it, and say, okay, what's the lay of the land? Is it the dump right now? It's 18 handles, almost 1%. Some of our trades are going into trouble, obviously, but July's could be done. Honestly, if you're in a July trade, option-wise, that was slightly positive or slightly negative yesterday, and it was a bullish call. It's done.
Yeah.
I don't think it's going to come back.
No way.
On the
back
option
2
side.
days.
Yeah, exactly. Just reality of it. You got to. What happens is this: markets will have ups and downs. How do you manage out of a problem like this is what makes you or breaks you.
If you're
so you
long
have to
stocks,
be ready to handle the problem.
Let's just, because we might have some listeners who actually bought yesterday's rally here. The ones that sold yesterday's rally, congratulations. But the ones that bought yesterday's rally, how would you approach it? If you're underwater here, you're down 19 handles here right now. How do you approach it if you're actually long, just on some short-term overnight trades here?
On the stocks?
Stocks or...
Is it stock or futures?
Well, stick with your stocks.
Okay. I'm not saying whatever we should do that, but I would do. I'll take half off immediately. Okay? Just to take the pressure off my hand. I would still have to buy bias. Because a lot of times when it gets very painful, you're turning at the bottom.
Right.
So the next leg, you're going to get hurt too. So before you do anything else, downgrade or, throttle back on the pain level. I would come half off. Boom. I'll take the loss, just half. Okay, fine. Now that's pressure on me. Now I'm going to sit down and see what's my strategy. Am I going to have possibly a 3-day trade? Can I handle 3 days of pain? Or should I put some puts up right now? Okay? Or do a pairs trade, depending what kind of stock it is, okay? Can I find something with a decent correlation to a pairs trade with a short downward now? So now I'm neutralizing myself. Because basically what you really need to do is to get rid of the time effect. So you want to buy time. Okay, you want to buy time without impacting your portfolio. If we are getting pushed downward, okay, it's simple math. Every day is going to be worse. So you need some cushion there on the short side. You reduce this, put some short side. Remember, for short you got to put up money. So right, you get paid, but you got to put up money. So there's a reserve there. So now you got to look at your portfolio size. Make sure you get. Obviously, I hope the trade that you got out yesterday was not 80% of your portfolio. Okay. I'm talking about 2%, 3%, 4%. That kind of trades I usually do.
Right.
I don't go crazy. I never put 10% on one trade. Never, ever. It's not worth it. So by selling half, the hot blood rushes down from your head, comes back down from your head. Now you're a little bit clear. Now you say, okay, what's my hold the strategy? Well, you get that into play. So you stop the bleeding, okay? Then you got to start about exit the strategy. Now, if the time that you bought here goes your way, okay, that means this is what it was, 1 or 2 days, and we turn around. Now you have some playing to do. Yes, it'll cost you some commission money, but these commissions are nothing compared to what you could not do by sitting there and, compared to what you could be hit with if you sit there and do nothing and pray.
Right.
And we don't pray.
When you're praying, you're in trouble.
To the Navy, there's no praying in the Navy. So
there's no praying in the Navy. I don't know.
Yeah, exactly. Because people will say, well, the day or two will come back. Guess what? The next 2 or 3 days, they've ruined their own lives, their attitude, their interaction with their better half, their kids, in other decisions they make. It just the whole thing goes shebang until we're back to go-go days again. You can't do that. You got to be emotionless. Okay? You got to control your emotions, and the way you can do that is by controlling your misbehavior in your account.
Right, that's very important.
I call that misbehavior. I mean it.
Rob Hood's asking, and I know we've asked this before, about learning about your sigmas. Now, is that something that I know you're not going to give away your secret sauce and everything that goes behind that. Is that?
What do you mean? Where do I buy it?
No, your sigmas. They want to learn more about your sigmas.
Oh, where you can learn it? Go to our product page under proprietary indicators, and there's a PDFs on every indicator. We do not give all the code out, obviously, but we give you enough to read to A, enthuse you, B, have you build some confidence in the indicator. Because you're not going to use the indicator, you're not going to trade with it, you're not going to make money with it if you don't believe in it, if you don't have some level of confidence in it. And we tell people too, Ethan gave a talk a couple of months ago. There's a webinar on that on our webinar page. You can drop down menus. Under about, I think it is, called educational webinars. He said, don't trade for a month with these indicators. Watch them. Because you need to build that, you need to internalize it to see what the Sigma channel is doing and what ECI is doing. And let's say what's our first hour indicator is doing, your FHHP, which I don't agree with Fari Hamzei, first hour high and low, and also what VWAP is doing. When you put them all together, it gels. It gels as you go. But that process takes time. So as a first step, even before you buy, we give you some PDFs. Have you take a look at the PDF?
Okay.
See what the logic is and why.
Okay. All right.
Fari, one more thing before you go. Ace is bringing up a good point. Obviously, we're both professional traders, and I'm with Bright Trading. I have access to a lot of capital, so I can diversify my trading portfolio. But a lot of retail traders are playing with smaller accounts, and they obviously have trouble, diversifying their trading portfolio as well. Ace is saying it's not easy for, a trader, some of these smaller guys, not to put at least 10%.
To do 2%, 3%, you mean?
Yeah, or 10%. Like you were saying, don't put 10% on one trade, but a lot of retail traders do that just because they probably have capital constraints. Is it different for retail traders?
No, we've all been there and done that. Remember, there was one day in our lives that was our trade one. Remember? We did not. We were not. They were not. I was not taught trading in the womb of my mom. When I came out, one day was my trade one, and those first trades, as you try to do, are the most critical ones in your life, of trading life. So at one point, yes, we all had trades that were over 10% and so forth. Well, but remember, back then I was trading something very small, very system. When I was trading in 1980, post silver crash, you had to call it in. Your statement showed up a month plus 4 days afterwards. 3 days after, right? Yeah. Right. Your ticket showed up the next day. So you have to make it hand notes. Now they've given us all these guns, if you will. Okay. Or now they're missiles. Now, if we mispoint them, we could really cause a lot of damage to ourselves. So I know it's difficult, but please, the only way you could do this is keep the bet size small. There's another alternative you could do, paper trade, or use simulation. Or trade every other idea in their account, the other idea in the paper. Okay? Trade one trade in the paper. Okay. Yeah, trade one trade. Well, no, that's how you learn. Trade one, and you understand to calm your nerves. Notice I'm not nervous here.
Yeah,
Stay
no,
18 handles down.
yeah, I had
Okay,
to.
but we have a diversified portfolio. Why? Because I've been beaten up enough. There's no schooling for this. That's his tuition. I paid enough tuition. I know how I have to handle myself.
Yeah.
And getting nervous is not going to solve the problem because you're not going to think it straight. But for the younger traders, my suggestion is trade one live, trade one on paper. Like use a simulator. A lot of platforms have simulators. So you don't have to keep track of it by hand. But you get fairly close to real fields there. I mean, don't go to some like buying, selling Russian debt instruments. No. I'm talking about liquid stuff here on NYC and NASDAQ. You get fairly close to real feel using their simulation servers, okay? But you trade one at a time. Now then, see where you are. Bets. What kills people is their bet size.
Their bet size
and their ego. Two things kills traders.
And also
bet size and ego.
And also frequency of trading too. I mean, I could, Dennis, and you too. I mean, there were days where you could just trade, so much volume, and you could really control your risk. So even on trades that you thought, that you were wrong on, you could scratch, or you could maybe make a little money on it. And now, it's much different. You just have to be, very, very careful in the trades that you take. Wait for the setups. There's just not, high frequency trading. I mean, I guess we were, Dennis. I mean, there were days where we traded, 500,000 shares or something. Those days are gone. You just have to really pick your pot. So, okay, Fari, we got to hop here. Thanks for your background and your experience in here. We missed you last Thursday, but we'll catch you next week.
Sorry about that. I had none for him.
That's okay.
You know what? I need soup money.
You got it. You got it.
3-day weekend. I needed soup money. Better half was visiting. I had to take care of her, so I had to decide: do I want to talk to you guys or go and hit non-farm payroll? Unfortunately, non-farm payroll was just so-so. It wasn't all that great.
When are you coming to Detroit so we can have you in studio for the show and you can put your Sigma charts up for us?
Well, first of all, I can do Sigma charts up from here for you guys.
Right. Okay.
I gave that suggestions before, but I don't know. I mean, I can set up things where you guys can see it, actually.
Okay.
Anybody who's in your chat room right now. But that's one thing. But Detroit, I would love to come and visit. We'll figure it out.
Okay.
As long as it's not too cold. I'm not coming out in the fall, late fall.
Okay.
But, yeah, I'll have no problem.
Okay.
I can come up one week and we'll set up and enjoy. Not a problem.
Okay. All right. Thanks a lot, Fari.
It'll be my honor, sir.
Okay. We'll talk to you soon.
Yes, sir.
All right.
Thanks.
Bye-bye.
Fari.
All right,
Thanks,
Dennis.
Bye-bye.